Everyone, and thank you to the IFT for inviting me along to speak to you this morning. If we go to the next slide, please. Don't worry, we're not here today to do a sales pitch or anything like that, but hopefully give you an insight into our experience across the hotel sector, and we'll give you an idea as to a short overview of the last year and an outlook of what we can expect to see in the year ahead. I can move on, please, Tyler. Next slide, please, Tyler. Tyler, again, if you could, please. Okay, so whilst the pandemic's been very challenging for everybody, it's been particularly tricky for the hotel sector. But it's not all been bad news. There's no doubt that we've seen some winners and some losers. One of the elements of the market that's been quite interesting is how the provinces have outperformed London for a change. Obviously, London's been impacted by the lack of international travel and corporate market. However, there was an element through the summer where the provincial market did much better from being able to open up to the staycation trade, as you can see from these stats. Okay, we'll move on to the next one. If you can move on to the next one, please, Tyler. As lockdown eases and more of the population have received their vaccines, we'll see occupancy and rates continue to move forwards. However, it could be another couple of years until we're back to the kind of trading numbers that we saw in 2019. But with the lockdown being released, I think we'll see a much better summer. Okay, if you go to the next slide. In terms of the market, one of the areas that sort of has picked up since we've had the latest route out of lockdown announced by Boris, applicant activity in particular has picked up, and it's probably fair to say that the majority of buyers in the market are cash buyers, and they're looking to take advantage of distressed opportunities. There haven't been as many of those as we perhaps initially thought at this stage, and certainly in terms of private owners, I think it's safe to say and sensible to say from their perspective that they're sitting on their hands. And this has caused an issue where there's been very much a shortage of good quality stock in the market. And I think we've got, if you look at the deals we've got in the pipeline, there are a number of transactions that were agreed pre-COVID over a year ago and during the summer relaxation of the lockdown rules, where deals were put in hand, we moved them along at a fair pace, and then they've stalled. And in most of the cases of the deals that we have in our pipeline, I think those deals will happen, but it's more a case of buyer and seller waiting for the hotels to properly reopen so that it is a going concern transaction that takes place. So the majority of deals we're seeing are distressed deals at the moment. Go on to the next slide, please. Thank you. Operators that have continued to invest in their assets and in training their staff through the lockdown period will probably fare much better than those that haven't. Obvious to say, but you'd be very surprised, maybe not, in how some operators have performed. The owners of hotels certainly need to be resilient and very much a quick thinking to react to the market as it changes, and ensure they're targeting the best market. The number of hoteliers I know who had full service hotels who've moved over to focus on accommodation-led business to ensure they're still generating the right kind of revenue and profit, and that's going to be vital moving forwards. Move on to the next slide. The staycation was obviously, as I mentioned earlier, was an important saviour for many hoteliers through the last summer period, and I think that is going to be a likely trend we're going to see continue through this year. and certainly talking to people like Tim Rumney, who you're going to listen to in a minute, and other hotel owners and operators, certainly there's been a massive pickup in bookings. So that part of the market looks like it will come back pretty quickly. The other area in the marketplace that once the vaccines are out and we're released will be the wedding market. There's certainly significant pent-up demand for weddings, and that'll be interesting to see that come back. We can move on to the next slide. As quickly as the market retracted a year ago, I think we will see it come back in time. However, there are a lot of challenges still for operators, and one of those areas that is impacting places like London and the other major cities is the corporate market. We've seen that hit significantly, and with the advent of a medium such as this to talk to people and Zoom and Teams, I think that market will be slower to return. The other areas that we've seen hotels hit hard, places like airport hotels, which obviously rely on the international traveller. So moving on to valuations, which Mike touched on. It's a difficult element for our valuation side of the business at the moment, because obviously there's such a shortage of transactions. However, the way we value hotels, without wishing to teach anyone to suck eggs, is based on the RICS Red Book methodology of valuing hotels, whereby we apply a multiplier to the EBITDA, and that multiplier will be affected by the factors you can see on the screen there. So physical factors of the hotel, elements that affect the performance, and operational style. And I think some of the factors that you'll be looking at the moment as we come out of the pandemic are hotels that are predominantly accommodation led are probably going to be those that are out of the blocks quickest. Those that rely on corporate will be that much slower, of course. And currently there are obviously fewer transactions, so again, to apply the comparables that we'd normally include in a valuation report is proving that much more difficult right now. But I suspect that it's a case of working with yourselves, the stakeholders, as Mike said earlier, and the operators, to sort of make sure the operator has the right route out of lockdown, and to generate the business, getting the business back to where it was. Okay, next slide, please. Finally, looking ahead, as the lockdown eases, the cathedral cities and leisure break destinations, I'm pretty sure, will recover first. We saw places like York and Chester and the Lake District in the north perform pretty well through the last summer. I think that's going to be back as soon as the lockdown is released. The wedding market I've touched on already, but again, I think later this year that part of the market will return. Corporate London and airport markets are probably going to be that much slower, but at some point they will return. Move to the final slide. Thank you for listening to me this morning. Hope that you found that short whistle-stop presentation of interest, and if there's anything that you need to ask, I understand there'll be an opportunity to ask some questions at the end. I'll now hand you over to Tim Rumney from Best Western. Thank you very much.
Well, good morning, everybody. Hopefully everybody can hear me. Thank you for giving me the opportunity to present to you today. I'm going to share my thoughts on the COVID crisis, referencing the impact of the pandemic, but also more positively, the road to recovery. So first of all, who am I? Well, I'm hoping I'll be able to bring a unique perspective today, looking at the crisis from the position of chairman of a national hotel brand, hotel owner, and hospitality consultant. We haven't got time, and I'm sure you don't want to hear my full backstory, but like many hoteliers, I got into the industry by accident, working in the Intercontinental and Forte hotel groups, before then moving to the independent sector, becoming a managing director and shareholder. And we sold our main asset, the Castle Green Hotel in Kendal, in 2018, in what was described as the largest and most valuable individual hotel sale that's ever taken place in Cumbria, which feels like very good timing at the moment, I must say. Well, we all know what happened on March the 23rd. Was that only a year ago? I was actually staying in a hotel that night with a group of hoteliers, and it certainly was a 9/11 moment, and it did feel like nothing was ever going to be the same again. And of course, we'd felt the impact of the pandemic coming for a number of weeks as the cancellations started piling in from the beginning of March. But the announcement of lockdown was the point at which it was clear that we were moving into a new norm. So what I thought I'd do in terms of the three sort of hats that I wear, I suppose, is focus on this slide on what the business norms are that any hotel should have been working to as a minimum. This is pre-COVID, of course, giving an overall gross operating profit for the business between 24 and 28%, depending on the business mix, of course. Now, this used to be higher back in the day, perhaps 15, 20 years ago, but the third-party OTA commission costs, which I notice Martin referenced on his last slide there, have made a significant impact on profitability. And I've shown that as 12% of accommodation sales, but that does vary depending on the number of bedrooms a hotel operates. As you can see, even pre-COVID, the food and beverage gross operating profit is very tight. And if any one of these costs is not controlled efficiently, will disappear very quickly. And this is where a lot of risk exists for hotels that are now going to be going into reopening mode. However, I think it's fair to say pre-COVID that despite increased costs over the years, a decent operator could make decent money. Now, COVID has changed all that, and I think the situation we're in, even with an encouraging prospect in terms of reopening and the demand being there, is that poor operators will fail, decent operators will struggle, and it's only by focusing laser-like on the business that operators are going to survive in many cases. What I thought I'd do in order to demonstrate this in real time, if you like, is show you what the impact has been on my hotel. The hotel that we have is called the PINEWOOD. It's a Best Western branded hotel, and it's an 89-bedroom hotel, 4-star in Cheshire, 3 miles from Manchester Airport. And again, as Martin said, corporate and airport locations have been particularly hard hit. Now, prior to COVID, sales were 2.75 million with a gross operating profit of 643k, which was 24%. And that's having taken over a loss-making business in 2011 when it was turning over £1 million. So the grey section here are the sales, the orange is the gross operating profit. And then we head to 2020. So this is COVID year, sales are dark red, and losses, unfortunately, we're showing a light red. Not surprisingly, the sales fall off a cliff after lockdown 1. They did recover through the summer, nearly back to break even in September, before falling away as additional restrictions were reintroduced. There's a slight lag in the graph versus the dates as I've taken the monthly sales at the end date, but you can clearly see the pattern of the impact of the restrictions. We closed again on January the 1st this year, and we're due to open, or we will open, subject to the roadmap dates, on April the 12th. So I haven't shown the last 3 months, but it's been as per last spring. So if we combine the two graphs, it's clearly a bleak picture. And I illustrate this really just to show the impact that a business, that has been on a particular business, and we're not unusual in this regard throughout the COVID crisis. And this is a hotel that was achieving industry norms for its type and for its location. So many poorer performing hotels will be in a much worse position. However, on the positive side, we have seen we've introduced operational efficiencies as a result of COVID, and we've reduced our losses throughout the period because we've hardwired these efficiencies into our operation so that we can really focus on building back stronger when we reopen. It's undoubtedly the case that the government support has helped reduce the losses, no business rates, VAT reduction to 5%, and the furlough scheme. But we've also reduced our operational break even when we are open to 100k per month, so that when sales recover, we will be a much more efficient operation. And I think wise hoteliers have used this opportunity of being closed to sit down and analyze the costs and take everything back to a zero base. The first time really, because we're a 24/7, 365 operation, that we've ever had the opportunity to do that. So what's been the impact on Best Western? So this is Best Western GB. The graph shows the net rooms booked throughout the pandemic from March 20 to February 21. And you can see there the relaxation of the first lockdown saw a surge in bookings, but then customers, I think, reverted to type and expected to see a deal, and we had to introduce tactical promotions in order to maintain the momentum. As Martin referenced, coastal, rural and resort destinations perform much better than city, corporate and airport locations. And because Best Western is disproportionately represented in these locations, in the rural and resort locations, we've performed much better versus other brand competitors. The recent roadmap announcement has driven bookings for the summer, but customers now expect much more flexible terms because obviously we're working in an uncertain environment, and cancellation periods so that bookings can be moved. And that's produced quite a shifting situation for us, which you can see on this graph here. So this is booking pace. So this is room nights on the books. And the blue bars represent this year in terms of bookings. If you go to the axis on your right-hand side, that represents the percentage change against 2019 and 2020. And it's clear to see that every time the dates change in terms of unlocking the economy, the pace of bookings gets pushed further out. And customers therefore have become skeptical about the unlocking. And if you look at June, for instance, we've got about 18,000 room nights there on the books. That still represents nearly 40% down on 2019 and 2020. However, once we get to August, we're into a positive situation as far as this year is concerned, but that's obviously dependent upon these dates being hit. November's a bit of an anomaly there, so I would ignore that because we've got some large groups business on the books. And I think the other thing worth noting about this graph is that 2020, I'm sure we're all seeing this in our own businesses, is becoming largely irrelevant on all the metrics, whether it's pace or book business. And we really do, as operators, need to use 2019 as the benchmark. So in terms of the bookings for Best Western, there has been a marked effect through the new norm. There's much shorter lead-in times, especially for transient business. So we're finding that customers are looking towards we're having to move towards a 7-day cancellation for prepaid rates to counter this trend. However, we have got higher booking values as customers look for experiences rather than, in many cases, short city breaks, and longer stays as they look towards extended breaks and holidays because of the inability to travel abroad. So what's the outlook for Best Western, GB? Well, I think good for a number of reasons. Brands have the ability to harness trust for customer safety, which has become a priority as a result of COVID. Safety now is very much one of the key areas that the customers are looking for when they're making choices about booking. Customers are also looking for experiences, not just a bed and a pillow to lay their head on. They want to really experience something different when they go away. And because Best Western has a non-homogenized reputation, and it's a real mix of experiences, that's really played to our strengths. Best Western owners also have the freedom to create and innovate without the brand getting in the way. We're much less restrictive than some of the other brands. And we can also offer, and I think this is particularly important, short commercial contracts to aid recovery and a far more price competitive alternative to other global brands. So we're not tying hotels in for 10, 15 or 20-year deals. Typically, it'll be a 5-year deal. We also offer a range of 18 brands now, as most of the global and large brands do, a choice of hard branded and soft branded. So there's a real variety there for hotel owners to look at for a brand that suits their business. And we historically deliver around 30% of the channel business to the hotel. We can also, because we've got a very diverse offer, share services and resources to achieve cost efficiencies, which is going to be really important going forward. We offer a revenue management service, a procurement and cost management service, and obviously marketing, which is our key area. And I think what's really important about us is that we're a membership organisation by hotelier, for hotelier, a board of independent hoteliers. And that means that through the pandemic, we've been able to offer fee waivers and reductions to support our hotels. That's really in contrast to many of the other brands where reduction in fees has not been something that they've actively offered up. And as a hotel operator, I'd just share with you my top tips about what you should be doing, what we should be doing as hotel operators. I think the first thing to say is get on with it. And what I mean by this is it's really important to act decisively, whether it's opening or closing, and goodness knows we've had enough of that to decide upon, whether to furlough or to make redundancies, whether it's in terms of introducing technology or what you do about your safety protocols. The important thing is not to procrastinate, but to make those decisions and make them quickly. The next thing I would say is brand your survival. And I don't just mean put your hotel business into a brand, but trying to give an identity to all the activity that you are doing as a business. Because a brand gives security to the customer and more certainty. So for instance, when we introduce our safety protocols through Best Western, instead of giving it a dry health and safety tag, we called it Hotels That Care and gave it a logo so that it was very recognizable to the customer as something that would give them security and safety. And we've done this at hotel level and at brand level, whether it's WhatsApp groups by giving them a hashtag. For Pinewood, it's coming back stronger, or whether it's giving a brand to our food offering, our takeaway offering through. Last year we called 180 at home, just to make it something that people could identify with. Thirdly, I'd say talk and share. It's really important to engage with your teams, whether it's by Zoom or face-to-face. We've done throughout the whole of the pandemic at Best Western, right through the summer, the CEO and myself ran a Friday webinar called Friday Drinks with Tim and Rob, and it was an opportunity to maintain engagement with our members. At the hotel level, when we have reopened, we've had meetings with the team, and we've maintained those meetings by Zoom throughout. And in Best Western, we've had a weekly communication called the Recovery Comms, where we're updating members constantly on all the initiatives that we've got in place. Fourthly, celebrate success and call out failure. I think it's really important to be honest with your employees, honest about your financial results, honest about your break even, and honest about what they can expect in terms of coming back into the business. I think this crisis has given us an opportunity to reset the dial, and we certainly will be reducing the size of our management team and raising our expectations about what we expect from our teams. And I think we've got to be very straight with our employees about that. And that can really help with motivation in actual fact. And when we open our doors again and we get happy customers, really important to promote that satisfaction through things like TripAdvisor reviews and tell our customer base about it. And lastly, repeat, because these messages don't always land the first time. And particularly over the last year, when staff have been on furlough, it's going to take a while for them to get back into the zone. So repeat again and again and again. Well, thank you. I just wanted to share one final slide, which is the consulting side of the business. But I've really enjoyed the opportunity to share my thoughts with you today. And I'm going to hand over back to Paul now, who I think is going to organise the questions and answers. I'm very happy to take any questions either now or offline if you've got anything that you want to share with me later on. Thank you.
Thanks, Tim. That was great, and thanks Martin and Mike. But just a reminder, everybody, through the general chat or direct to myself, please feel free to post any questions that you'd like to put to the panel. So there was one question that came through regarding civils and the deadline of the 31st of March. So to answer that one, the position is civils isn't being extended, but it is being replaced by the recovery loan scheme. Full details on the British Business Bank website. Quite similar to civils. Limit is 10 million. Some slight differences insofar as the civils first 12 months, interest free period doesn't exist in that scheme, but it is 80% government guaranteed. So as I say, it's quite similar to civils, and that will run going forward to support businesses in the sector. So that's that one dealt with. Coming to other questions for the guys, Mike, you talked about HMRC and a lot of work that you've been doing with businesses in that area. Can you give us a flavour for the kind of agreements that you've been able to obtain across the last few months?
Yeah. I mean, look, ultimately, the work with HMRC comes down to it's bespoke to the business. There isn't a one-size-fits-all approach, and it's really demonstrating that if it wasn't for COVID that you would be a compliant taxpayer, and how you can effectively, what you've done to your business, what you've done in terms of cost cutting, as Tim said there, having a proper look at the P&L, sharing the pain with other stakeholders as to how you can achieve recovery. And we've seen many different sorts, I suppose, depending on the size of arrears, but we've had anything from 12 months to 26 months for some time to pay, which really does give that comfort that the HMRC position is on a sound footing, and kind of you can move that stakeholder to one side and you're not worried about them. When the winding up petitions and demands start to become more frequent, the HMRC aren't knocking on the door. So, really bespoke. Happy to have a chat with anyone who's got a situation that they just want to test. But yeah, anything from 12 to 20, 24, 26 months, dependent on the circumstances.
Okay, thanks, Mark. That's really, really helpful. Martin, what has and it's the ballpark number, but what has been the impact on values currently?
It's an interesting one, and I think the difficulty with the market has been the lack of transactional evidence. I think if you're looking at the values, the points to look for, as Tim said, is what we need to do is look at what an operator's been up to and how they've restructured their business to come out of COVID, because ultimately you're going to have an eye on the future business. Tim also said, it's also almost a case of resetting 2019 as the benchmark rather than looking at 2020, because it's not really relevant. I think there are certainly elements of the hotel sector that will be stronger than others. So it's very hard to say how the value will be, because it will be different for different businesses. The kind of multiplier that we put on a hotel that is sort of bedroom related and is profitable might be stronger at this moment in time. But as we come out and things like wedding venues pick up, the wedding sector is pretty good market, and there are a number of operators keen to acquire. And I've had probably 4 or 5 inquiries in the last week from parties looking to build small portfolios of wedding venues coming out of lockdown. So it's difficult to give a straight answer to it, because it's very much dependent on the business itself. But the points that we look at are the same that we always look at: are the profitability of the business, the KPIs of that business, its location, its customer base, and how sustainable the business is moving forward. So we'll always look at a fair, maintainable trade on that business. I think that's the way to look at it. And equally, as Tim showed you on his slide, traditionally hotels have always been profitable businesses if they're run in the right way. There have been squeezes on margin in terms of utility costs, staff costs, and the emergence of the OTAs. But if you wind the clock back before the OTAs, you were paying for hard copy printing, advertising in the Sunday Times or the Sunday papers, going on teletext and things like that. So there are always these challenges, but I think ultimately the market will come out strong. But I think the values will be very much dependent on the owner and how they bring their hotel out of the situation. And without a doubt, there's a lot of hotels that are going to probably fail, but there will be some winners as well.
Okay, thanks, Martin. That's really helpful. Tim, you're not going to escape. So best way, lots of independent operators. So what do you see as the biggest challenges for your members and for independent hotels, across the coming months?
I think the most immediate risk that we've got is a third wave. We've got a real mix of sort of sentiments at the moment, because we're all looking forward to either April 12th, where you can do the outside dining. That's enough for us to reopen for business travellers, or May 17th for leisure travel, and what should be a positive summer. Obviously, it's location related in terms of the sort of demand that you'll get. But I think if we get a third wave, a lot of hotels now are very, very short on cash, and that could be what would tip them over. So I think that's the biggest challenge for us. Moving down the line, the sensible hotels have fixed the roof while the sun was shining. They've looked to invest in their product. What's happened with our reserves being exhausted through supporting our hotels over the last 12 months is that we haven't necessarily got that capital to invest in the product. And debt is obviously high because we've taken on additional borrowing. So I think CapEx investment is going to be a challenge for some businesses moving forward. And if they're not in fine fettle now, that could start to show. And I think the other one I'd say is a shift to the, I referenced this in my presentation, a shift to the experience break. I think what's going to happen in the corporate conference and events market is, I see it a bit like what's happened on the high street, where there's been this sort of, in a year, a 10-year shift towards the internet. Now, we've been talking about video conferencing and fewer corporate events for many years, but I think this enforced 12-month lockdown has accelerated that. And the hotels that will perform well are the ones who can offer spa breaks, can offer an experience around their customer journey. The hotels that will struggle are ones that rely potentially on events and conferencing. And those hotels might need to look to repurpose either to attract in that more leisure-based market, or to move outside of hotels and look for repurposing into a different function altogether. So I'd say those are the sort of three areas I'd be looking at.
Okay, Tim, that's great. I'm going to stick with you because we had a great question come through about other businesses that are impacted and how they may be able to collaborate with hoteliers. So I'll read it if you can't see the chat function. So the question is, are local hoteliers actively speaking with local businesses who may be looking to divest from office space on a partnership with space sharing when lockdown ends?
Yeah, some hotels are. I mean, there's quite a lot through when we came out of the first lockdown. There were some products coming into the market whereby you could book a coffee table in the lounge, free car parking, free Wi-Fi. All you had to do was buy a coffee. Repurposing of bedrooms into sort of small meeting space for people that were sick of working at home. And I think there's a natural evolution there in talking to local businesses and hooking up to see what we can do to use our underutilized facilities more effectively by working in partnership with local business. I think one of the strengths of Best Western, and it's certainly been very evident through the pandemic, is that generally speaking, we're always independent hotels. We're usually very rooted in our communities. We know our local businesses. We tend to work with local suppliers and supply chains. So I think it's really important for hoteliers to get out and into their local community, speak to the local businesses and see how they can partner in areas like that. Now, we haven't got an initiative brand wide for that, but I think those are the sort of things from a individual hotel level that will really start to come through.
Okay, no, thanks, Tim. That's really good. I don't think we've got any further questions coming through at the moment, so I'm just mindful as we move towards 5 to 9 to get people back to the next Zoom call or Remo call if it's one of them. So from me, it's just a massive thank you to Tim, Martin, and Mike for your time this morning, and I hope the audience found the presentations insightful. I certainly did. Scares me that you talk about a third lockdown, Tim. I hope that doesn't happen. Really hope it doesn't happen.
I used to be a Boy Scout. You've always got to be prepared.
Yeah, well, hope fingers crossed.
Yeah, absolutely.
Again, thanks very much, guys, and thanks for everybody for taking the time to join the call on behalf of the IFT. It's great to have you. Stay safe, and hopefully see you all soon. And thanks again.
Thank you.